Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Wednesday, May 25th. Firstly to the S&P 500 and strong buying coming into the market today. Good solid follow through off the previous day's trading. The market finding support at the top of the Ichimoku cloud. The buyers continuing with control as they did for the previous day's trading, but a couple of factors here suggest that we do need to be rather cautious about the potential for continuation of the trend to the upside. Firstly, the large reduction in the size of the white body suggests that net momentum between the open and the close is much smaller than it was previously. So all of that momentum that the buyers built for the previous day's trading is no longer as strong as it was. And also the range of this current bar or candle is very much smaller, suggesting that the buyers are not as eager as they were. Now, importantly, however, the market has closed above this important zone of resistance and closed in a fairly bullish manner, with the buyers in control showing some commitment. Just those loss of momentum and eagerness are some causes for concern. Also, we've seen resistance coming in excuse me, at the 2093 level, and we are obviously getting up very close to that round number 2100, which has been a major area in the past, and it is an area that we will need to bridge through if we are going to see the market trading to significantly higher levels. Now, just looking back, the last time that we were trading up around this 2100 level prior to in April this year was in December, and then prior to that in November, and then we had the market testing up around this 2125 above that resistance in July a year ago. So here we are potentially trading into an area where we've seen some fairly strong price rejection and a distinct lack of follow through after we end up trading into these regions. Now, there is an opportunity here for the buyers, as I've mentioned, but we do need to bridge up through these areas, and a strong bullish close up above the 2100 level could eventually see the market testing into this region of resistance up around this 2125 level or 2134 region at that major high. Now, just looking at our bands here today, and the price action today is trading up above the upper band, whereas the upper band held as resistance for the previous day's trading. We've now broken out to the upside, serving as a warning that we could see a resumption of that previous significant second time frame uptrend. What we want to see here is strong follow through, and we want to see another strong bullish candle. We have some doubt about that because of the reduction of the size of the body and a loss of momentum, but also the market breaching up through some of these swing highs, which are very close to that 2100 level. So 2100 becomes very, very important for this market. Now, if we do see any selling coming in, watching firstly the upper band around 2075 to hold support, then down at the middle of the bands around 2061. Take a look at the S&P 500 futures on the hourly charts here, and this really does highlight how strong the market has been over the last couple of days, where we saw the previous day's trading the market testing up to the third pivot point resistance level, and we don't tend to see strong follow through after that. Follow through here has been a little bit better than I thought it would be. We did have a white body candle, buyers showing control, and the market trading up above the Ichimoku cloud for all of the session, looking very overextended as we opened the trading day and then continued higher, and was rather surprising, and it really does say something about the general strength of the buyers in the market at the moment. After finding some resistance around the first pivot point level, we did see the market retrace back towards the Tenkan-sen, and in the new session we are just trading down through the Tenkan-sen, so a weakening in that short-term time frame and testing just below the middle pivot point level and testing around the Kijun-sen, which is holding as some support at the moment. If we do breach through the Kijun-sen, we could see the market attempt to retrace to find equilibrium in that longer-term time frame. We are still looking overextended at the moment, in depth away from the Ichimoku cloud, but as we move further into the day, the cloud will actually move higher, and therefore weaken the urgency for the market to attempt to retrace. So any retracement that we're likely to see will have to happen within the next couple of hours. First pivot point support level 2077. The second is at 2066, and it coincides with the Ichimoku cloud, with the top of the cloud in a few hours' time, which will strengthen the potential resistance around that level. And towards the end of the day, it coincides with the bottom of the cloud, so very strong support down below. I doubt we are going to see the market trading down through the Ichimoku cloud today, but we certainly could see strong support coming in at the first or second pivot point support level. Now, if the market does bounce off these areas, and there is a possibility as we get further into the day that we could see buyers return, so let's watch for that. We will be watching the first pivot point resistance level as a target, 2096, and then the second up at 2103. And just looking at the bands here on the hourly charts, and what we saw was the market trading significantly higher for the prior day. The band's quite wide. The band's then starting to squeeze up, reflecting that lack of momentum. Volatility was coming off, and it suggested that the trending efficiency that we saw here previously was no longer in the market. Now, for the start of this session, we've seen the market trading within the band, suggesting that that strong bullish tone that we had in that medium-term time frame is over. So we could be seeing the market transition to a medium-term downtrend phase. This is all short-term stuff on the hourly charts. We'll be looking for a bearish breakout down below the bottom band if we are going to see lower levels, or we still could see the bullish breakout to the upside and the market test to higher levels. But at the moment, a neutral market by trading within the bands, finding some support at the bottom band at the moment, which trades at 2081, 2082.